So I got home from work yesterday and I was looking at the um, chart of ZB 30-year bonds, which is my preferred futures commodity to trade. I've been spending about the last year focusing my efforts on that commodity to learn all the nuances involved in it, and it's fairly predictable. I mean, there's the instances where I think because of the all of the volatility in the financial markets last few months, related to trade embargoes and such, that it's jumped around a little bit, acted a little unconventional from what we saw last year. Last year was a pretty good year, by the way. I think I finished the year with 37 trades that I actually took and lost two of them. So that was pretty dang good. I don't know if you watched the previous video. I was talking about how talking about a $650 math problem example I was given, where you know and how trading correlates with the effort required to start a business. And so if you'll remember, like I said in the previous video, $650, pretty conservative move in ZB on a daily basis. How that really equates, after you scale up, it equates to more like $6,500. And if you remember, I said, I had finished up the year last year with 37 trades in ZB. That's, about 3 a month on average. Some months I think were 2. I think there was a month where there was 5. Now I have not quite scaled up to 10 contracts yet, which is what it would take to hit that $6,500. But I'm on my way. And the hope with these videos is that we kind of travel along, talk about trading together. You're more than welcome to drop a comment in a video, any video, it doesn't matter. I watch for the comments, and if I think it's something that the larger audience would benefit from, I'll include it in the video. We'll talk about it. Anyway, not to digress too far off topic, but last night I was looking at the chart of ZB, and what I noticed was, it appears to be, for the last week in what we call an accumulation phase. And what that really means is, we're small time retail traders. And, what our focus should be on is, taking a little bit of the action when it's available off the backs of the large institutional traders. So, one of the things that I look for, or I have been looking at, more recently, last couple months, is, looking for signs and symptoms of institutional trading. And, I think part of everyone's journey, when learning about how to trade, once you sift through all of the information that's thrown at you as soon as you start uh, searching on the internet about trading. Um, because these days with all devices connected and everything, it's almost like that AI technology or whatever it is, you know, looks at what you're spending time on and then inundates you with information, um, related to it. So anyway, what was I saying? Oh, getting back, getting back. I lost my train of thought. Anyway, you know, one of the things that you'll eventually come around to is uh, trying to understand price action, or when you look at your chart and you see all those candles on a chart, which I suspect most people are using a candle chart, not a bar chart or a line chart. Um, candles are pretty clean looking. Heck, you could even, depending on your trading platform, you can even make them whatever color you want. Whatever's visually appealing to your eye. Uh, anyway, invariably you're gonna find yourself drawn to, candles. What do the different candles signify, if anything? And you know, and then groupings of candles. And there's a ton of books out there. Um, one good one that I read was Japanese Candlesticks. I can't remember who wrote it, but it's a big red cover book if you're looking for it, on Amazon or something like that. If you can't find it, someone's really curious about what book I'm referring to, send me a drop a comment or something, and I'll let you know what book I'm referring to. Um, Another book I read was Price Action, Volume and Price Action Analysis by Anna Cooling, which was outstanding. Anyway, you'll find yourself looking at candles and trying to uh, anticipate, what the market's gonna do. And I'll just caution you that, you know, that can be pretty risky because at the end of the day, um, one large institutional trader can make a move, whether they're buying or they're selling, a large volume of contracts, and cause the market to do something that it might not normally do if it was engaged in the normal, order flow. So, take it for what it's worth. They're interesting reads. They definitely add to your educational basis, but when you're just starting out, I'd use them for just that. Add to your knowledge repertoire, if you will, but I wouldn't depend on them to, make trading decisions. Maybe as you advance a little bit more, they're another confirmation of your trading strategy. But anyway, what I was saying was, looking at the chart last night, again, ZB 30-year bonds, and it appeared that for the last week we've been in an accumulation phase, which is the large buyers, um, stacking up contracts for a future move higher. Uh, we've been on a slight inclined bullish trend for the last about 2 months, and then we had a pretty sharp sell-off bounce test, and now we're kind of hovering at that low point, um, which looks to be a pretty good support zone. If you go back, several months, you'll see instances where the price came down and kind of hovered around that zone and then climbed back up, but it seemed to return back there, and that's kind of where it's at now. Um, and typically what happens is, or what I've seen happen, especially in this commodity, is that the the daily bars, one bar equals a day. I trade on a daily time frame. I think that's pretty ideal for someone that is still working for a living, like I am. Um, it just allows me to do my thing without having to focus on what's happening throughout the day. Because if you're a busy person working, busy professional, busy student, you know, heck, you could be a stay-at-home mom, or 2025 stay-at-home dad, which is great. I think those folks, I think stay-at-home moms really have gotten you know not the credit that they deserve. If you're a stay-at-home mom, man, I think you've got the hardest job in the world. Probably one of the most rewarding, but hardest job in the world nonetheless, because your day is, there's so much self-sacrifice that goes into your day. Uh, my hat's off to you. If you're a stay-at-home mom and you're watching, or someone who's a stay-at-home mom and you're watching, man, tell them thank you, because that's a thankless job. But one that we're very dependent on, and those stay-at-home moms out there, they're the glue. They're the ones that keep it together. They're the ones that let us fellows, you know, ramble on out of the house in the morning and head off to work, so we can earn a living, provide for our families. But let's be real, fellows and ladies. If you've got that partner at home, you need to appreciate them, because I don't know about you, but they're working harder than mine's working harder than me. Um, but I'm rambling. So pretty easy to do when you're just talking to you folks driving to work. But let's try to stick to the subject. Just wanted to give that shout out there real quick. Anyway, like I said, ZB's kind of hanging around at that support area, bouncing up, bouncing down over one day to the next. And it moves. Its average true range, uh, is in the 20 to 30 tick range, which 20 ticks is essentially that $650 I was referring to. 30 ticks is around 900 ish. So what ends up happening is you've got this trading edge, or if you don't have it yet, I'm sure you're on a hunt to acquire one, um, and that's your trading strategy. But anyway, what ends up happening is when you're analyzing charts, a funny thing starts to happen. Your mind starts buzzing, starts coming up with ideas, starts coming up with probabilities, uh, of what you think is going to happen, and that's a dangerous trap. Um, you know, trading's like flipping a coin. You don't know what's going to happen before the market opens. Anything could really happen. Uh, the big institutions are manipulating the market in their favor. Now, not something illegal, but they just have the financial capital to do things that you and I can't do. So that's where the importance of sticking to your strategy comes in, and where I think the most valuable commodity that you will develop in yourself is patience. Patience is really the secret sauce to successful trading, um, in my opinion, and it has been for me. If you think about it, you know, if you if you backtest your trading strategy against a block of time, and you know only take trades when you get a valid setup, you can calculate a win rate percentage, um, and you know and tell if your strategy will work over time. And there's going to be times when it doesn't. That's okay. I just chalk those up to the instances where you know somebody had a different agenda, or the market itself had a different agenda for the day, and it's going to happen. Um, that's where risk management comes into play. We can talk about that on a different video. What is that? Um, but anyway, where it gets difficult is when you're doing it with live money, because you know emotions kick in. And it was messing with me last night. I was looking at the chart, just got home from work, looking at the chart, saw the price hanging around at that area. A full day's worth of healthy volume. 300,000 contracts traded. Um, Not very much in the way of movement on the candle, which tells me that on this particular candle, um, it was a return down to that support level from the day before, where it pushed up. Um, and the candle had a long bottom wick, which means that it opened, it sold off, and then before the market closed, it returned back to where it started, close to where it started for the day. Um, that accounted for a level of volume that is normally seen on a more of a widespread candle. So kind of confirmed to me that it's an accumulation area for larger institutions. Kind of what I'm looking for on my trading strategy is um, a setup that confirms momentum. So it's not a breakout strategy. It's a crossover strategy. I use a couple of moving averages and and a momentum indicator. Um, that I've kind of fine tuned over the last year and a half, and it works pretty good for me. And that's kind of on the path. That's kind of the path I believe that probably most of you are on. You're either hunting for that strategy or you've got one. But the strategy is not the issue. It's how you use it. It's how you execute it. And that's really where that that discipline to remain patient comes in. Um, because I'm no different than any of you. I look at the chart, and that's what I was getting to um, about last night's uh, examination, if you will, of the price action for the day. Is I had a pretty strong gut inclination that this market was going to move up during this trading period. And that's the thing about the financial markets is they trade 24 hours a day. Now you don't get the volume overnight that we get, during the U.S. market, but the world is trading in our financial markets, just just on a lower scale. And when I got up this morning, I checked the chart again real quick. Takes about 5 minutes, and lo and behold, you know, it went up, and it grew. It ticked up. Uh, it increased by 18 ticks. It went up 18 ticks overnight on about 50,000 contracts sold, and you know that's 600 of that $650 I was referring to. And had I taken a trade, I would have won it. But you know what? That's where the gambling aspect of trading comes in. Um, and I've made those mistakes before. I'm sure you've made those mistakes before. If you haven't, you're going to. It's inevitable. Um, I can I can make a million videos, talking to you about uh, staying disciplined and following your trading strategy and being patient. But I mean, it's like being a teenager. You think you know it all until you don't. And really, what has to happen is you got to get burned a couple of times, um, and the pain of those losses will cause you to rethink your approach to trading, um, and approach it like a business and not like a night out at the casino in Vegas. Because when you don't stick to your trading strategy, that's basically what you're doing. You're just gambling. And I'm sure you work too hard for your money to just be gambling it away unknowingly, thinking that you're going to outsmart everybody else because you're not. I used to think that too. I take great solace in the idea that, hey, there's either a setup or there's not. And you know, uh, if there's a setup that I've seen in the past in my back testing that follows my strategy, then I'm taking it, and I'm taking it every single time because trading is a numbers game, and if you manage your risk, you know, using an appropriate stop loss, um, you know, it keeps you from um, suffering large losses. Matter of fact, stop loss will, close out automatically if it's touched. And then if you set your trades up right, if your stop loss is hit, it cancels out your limit order to close out your position with a small loss, and that's just the way it goes. It's the cost of doing business. Um, you know, and of course the same thing happens if your profit target is hit, it'll cancel out your stop loss, and then you're neutral in the market, and you're either collecting chips or you survive to trade another day. Um, and then, you know, much like a business where you're looking to scale your business. I mean, you could be a guy that you know pours concrete for a living, decorative curbing. I remember in the 90s that was a big thing. Um, but it doesn't really matter what your business is. In order to grow your business, you've got to scale it. Whether you get better at what you're doing, so you can charge more money if you're a service-based business, or you can increase your inventory if you sell a product. In trading, you're looking to build your account, and in the beginning, it feels like it takes forever because even if you're collecting $600-700 off of a trade, and you grab you know one, two, three, four of those a month, doesn't really feel like you're getting very far in the beginning. But you give it a few months, give it a year, you know, take those wins and let your account grow. And as it grows a little bit, you can add another contract, and you can add another contract. And before you know it, you're seeing those $6,000, $6,500 wins on a trade. Once you get to 10 contracts, and I just use 10 contracts because that's my current goal. Um, and then we'll reevaluate from there. Uh, but that's how you scale a business. That's how you scale your trading business. And the difference in this business is that if you will stick to your trading strategy and be patient and collect those wins, you know you're being paid to learn, which I don't know too many institutions that pay you to learn a new skill. Uh, Generally, if you're going to college, you're paying to play, with the future hope that you'll get a return on your money. And this one, you can get that return from the beginning. Um, so anyway, I've gotten to work. Another great video. Love chatting with you folks. Kind of emptying my brain, um, you know, in hopes that you guys can take something away from it. So hope you enjoyed the video. I'll see you on the next clip.